All right, everyone. Well, this is not the position to be in for somebody that talks for a good bit of the day. I am, it seems, fighting off a bit of a chest cold, if you want to call it that. It just feels like I've got a growing lump of concrete right in the middle of my sternum. And so if I sound out of breath or wind up hacking into the mic, I apologize ahead of time. We actually had a good one. I shouldn't say actually, but what I mean by we actually had a good one-on-one support today is that I wound up being fairly succinct and I think staying on point. I only got off on a political rant, I think, twice. So anyway, some good stuff in today's one-on-one support session. That's actually why we were looking at a weekly and a daily chart when we first started this whole thing up. Also, to compound issues, my charts are running very, very slowly, so we'll have to wait here while they update. Basically, we're looking at the bottoming process continuing with the British pound. On the daily bars, what I'm going to point out here is that, actually, I think I can do it here. Let me see if my drawing tools will come up or not. There we go. Okay, you've got this downward sloping trading lane working on the daily bars. It's a very sloppy trading lane. We've got a couple of points here where the market pushes out well beyond its prior range. If I were going to connect the highs, this would be more of the traditional trading lane style right here. And so you can see by doing that, by connecting this high and this high, you can see that this bottom line doesn't follow exactly by any stretch of the imagination. And so let's actually go up here. Whoops, there we go. Okay, so this would be the more traditional way to draw the trading lane. We would start out by placing the lines on our two high points here and then simply cloning the line, attaching it to the low, either this low here or this low, and then extending it out. In either case, you can see that that high doesn't fit, this one doesn't. These lows are not contacting, this one breaks through, but nevertheless, we are still moving along in this downward trading lane action. And until we break out of this stuff, you're going to need to check the weekly wrap last week. We've got some support and resistance zones that are about 1,500 points away. And bottom line is we've got to break through those before we're going to go anywhere. And so until then, we've got to keep our eyes open for more counter trend trading opportunities. In today's session, I gave a little bit away from what we do in our Plus, the system that we talk about in Plus as a way to gauge and gather counter trend types of trades. So you're going to want to go in and check that out. But bottom line is we can't expect a whole lot in the way of patterns. We can't expect a whole lot in the way of even trading, meaning all this chop like we've got throughout here, big whipsaws, coming off of highs, big penetrations through prior lows. So you either get the market holding at prior lows like this, or just rampaging right through them, attempting to hold the highs, if not rampaging through them. Just like a lot of uncertainty, a lot of whipsaw trading. You've got to expect that. And so now more than ever, get in there and take a look at the counter trend trading checklist. Make sure you've got the little dipper pattern at your disposal and you understand it, or the sneak attack pattern at your disposal and that you understand it. So coming into tomorrow's trading, let's actually go up to a 4-hour bar here. What we've got to be concerned with, or focused on rather, are the lows from this February, the middle February timeframe that we're sitting at right now. It's going to be the lows coming into here and also back here from early February, late January. By drawing this across, you can see we've cleared most of those levels, and so we've got to see how the market deals with pushing back up into them. So for counter trend trading, that's going to be, I think, an ideal point. Let's see. First level is going to be about 4,100. You can see that 40.97 coming into these two lows here, and then just above that coming into the 41.61 level. So 4,100 to 41.61 is going to be, I think, the key level to watch as the market pops back up for counter trend trades. Also for basically the little dipper. Now that we have passed through this support level, the little dipper pattern is what we've got to be concerned with, and we've got a zone from 4,100 to 41.67 that the market's got to break through.